Good day, folks, and welcome to Best Trade Setup. In this video, I'll be taking you through the trades from the 31st of January 2024. As always, I show you the before and the after, and then we get deep into what I was looking at to make this trade. This is a wider picture, and then price actually reached take profit and went beyond. This was about the time there was a news release, high impact news release, Euro USD. Now this is the 15-minute time frame. This is where I took the sells. Usually on the 15-minute time frame, I mark out the break of structure, and with every single break of structure creates a order block and a level of resistance or support that when price goes through that level, I look for opportunities to enter a trade. This purple box here is a no trade zone. This is a wider view of the 15-minute time frame where price reached down to this order block that was created way before the 30th of January 2024. This is the 5-minute time frame. Now this setup here actually appeared the day before this and the day before that, about 3 or 4 setups similar to this one that I'm about to explain. I'll go back into the details of those trades in the next video, but for now let's look at this one. So this vertical blue line indicates a bullish bias. The bearish bias is indicated by the red vertical line. So as price was leading up to here, it breaks structure on the 5-minute time frame and creating order blocks as it does so. So what we see here is price breaking structure on the 5-minute time frame, creating this 5-minute order block and this significant support level. Now, given that price has already reached this high, though it's a valid buy, I cannot enter this trade because the first take profit has been reached. So I'd have to wait for price to come back down and show me further moves to the upside for me to re-enter the trade into the bullish bias. Now everything before this vertical blue line, I don't consider it when I am making my analysis on the next trade. It is a fresh start, so to speak. So price then goes back up down here. It creates this right here is a 3-candle pattern formed by 4 candles. It's either formed by 3 or 4 candles. It is because when you look at the start of this candle right here and the end here, when you add all these 4 candles up, it creates a pin hammer at a level of resistance. So now price continues doing fake outs in this area, and then this bearish candle closes below this 5-minute order block. This confirms a bearish bias, mainly because what we see here, the arrows are pointing at 4 pin hammers. Whenever I see pin hammers, I need 2 pin hammers so that it can equate to 1 confirmation. The only other time 1 pin hammer equates to 1 confirmation is when it follows a 3-candle pattern. Now, I placed all these notes, so feel free to pause the video and take a look at how I was analyzing the chart to lead into these sells that we see right before the news got released. What we have here on the first leg, this is the first leg, this 3-candle pattern I was mentioning earlier on, and then it's a fake out. And with every fake out is an automatic M pattern or a W pattern, mainly because a fake out happens at a level that's been created by a first leg right here. So an M pattern or a triple top, triple bottom is at a level in which the first peak was created. That's why every time I say every fake out comes with an M pattern or a W pattern. And then on the second and third leg, which is here, we see what I mentioned right here, a fake out, an M pattern in the form of a fake out, and a close below the 20 EMA. It's very important that price closes below the 20 EMA. That confirms a valid sell. Now, this area here between the purple box and the gray one is an hour before my trading session. here I can take a trade. It's only here, no matter what I see, I do not take a trade. The price usually doesn't work out in my favor when it's in this hour right here. So then price eventually reaches the low of the day and then comes back up into this level of support created when price broke this 5-minute order block. I look into these levels to enter trades because they are significant. Any other level in between I do not consider. So what we see is price going back up and forming a 3-candle pattern formed by these 4 candles. If you add them all up, you will see that it creates a pin hammer. Right here is where I entered my sell position with stop loss in this area. Price goes back up and then closes down below here. This is also a fake out. The only valid fake outs that I consider are formed by 3-candle patterns or 2 candles, as you can see right here, or this right here. When you look at a line chart, would form an M pattern in itself. So it is a valid M pattern. Anything else that takes more than 4 candles forming a 3-candle pattern doesn't count. But now, because these are 4 candles forming an M pattern, it does count. So 1 opportunity, 2 opportunities to go into sells. Now this is the chart, the wider view, and we can see that price did give us more than just a 1-to-1 risk to reward. Most of the times I'll go for a 1-to-1 or a 1-to-2, and it's because I trade the London session and the New York session. There are 20 trading days in a month, and each trading day has 2 sessions. So I have about 40 opportunities to enter a trade. So I don't mind risking 1 to 2% to get 1 to 2% because I know I'm going to have so many opportunities. That's why I'm okay with just walking away with such a low risk to reward ratio. Now this brings me to the end of my video. I hope you take something from it, that you learn something from it. And remember that no 2 traders trade the same. There are so many ways to trade. You just need to find the one that resonates with you. And with that, folks, I'll catch you on the next one where I show you more examples of this setup showing up on the charts. Take care. Cheers.